over in Iceland. The banking sector there has recovered from its collapse in 2008, and so has the political party that has been blamed for it. The public blamed the banking crash on the Independence Party's deregulation of Iceland's financial sector. 5 years later, it's back in power, having won more than 26% of the votes in the latest national election. Roza Kazan reports.
As results poured in from Saturday's parliamentary election, the message from Iceland's voters was loud and clear. No to the center-left government that brought the country back from the brink of insolvency, and yes to the party that presided over the 2008 financial meltdown.
I think people are slowly but surely seeing that what we absolutely need to do is create more jobs, create more value in Iceland, and we have the strongest plan to do exactly that.
Some voters called the election result a case of short-term memory loss. Initially, the public blamed the Independence Party and its coalition partners for triggering the crisis by promoting financial deregulation and allowing the nation's banks to take on too much debt.
People have forgotten, and that's why they vote Conservatives again.
The three largest lenders had grown 10 times the size of the economy and eventually failed under a mountain of debt. The government refused to bail out the banks, and Iceland's economy collapsed. The currency plunged in value, unemployment soared to almost 10%, and GDP shrank for 10 consecutive quarters.
The Icelandic banking system was the first banking system to run into very serious asset trouble in Europe, and we took various drastic measures very early, which basically meant that we let the banks fail.
The drastic measures started to pay off. Growth returned to 2.5% a year on average, and unemployment has dropped to just below 5%. Analysts say the outgoing government failed to communicate its successes. And many Icelanders are still struggling to repay home loans. The Independence Party has promised to end 4 years of austerity and promote growth by lowering taxes, forgiving or renegotiating mortgages, and ending capital controls. The party won 19 seats in a 63-seat parliament, so to keep its promises, it must now form a coalition government. Roza Kazan, CCTV.
For more on this, we're joined by Jacob Kierkegaard, Economist and Fellow at the Peterson Institute here in Washington, D.C. Welcome to the show. What Roza was talking about in that last story was the fact that a lot of folks who weren't any part of this bailout, so to speak, they're caught up in all this debt still, and even though the country seems to at least be better, individual citizens are still stuck with this enormous debt, the interest on it. You said it's tied to inflation to a large extent. I mean, we'd like you to explain what happens now to the people of Iceland.
Well, I think the reality is that, yes, the economy, the country, the national economy has recovered because Iceland did, if you like, the only thing they could do is they let their banks go bust. And they basically imposed losses on all the foreign creditors of the banks, but they did not impose any losses on the domestic creditors on the banks, which unfortunately means that a lot of the Icelandic individual citizens, they still carry a lot of debt.
They're still paying for it. Why didn't they try to write it off like we saw in situations in Greece and other parts of the world when you have a big default like this? Doesn't everyone just shave off a bit of what they owe?
Well, you see, part of the problem is that, one, you can impose losses on foreign creditors of a bank without having any problem. But in the case of Iceland, for instance, who owns a lot of the remaining debt and the Icelandic banks? Well, that's the Icelandic pension funds. So it's a little bit like, you know, paying Peter to rob Paul. If you try to do that. And the underlying reality for Iceland remains the case that this is a country that was vastly over-leveraged at the national level in the banking system, but also at the individual level. And that's a long, tough process.
Look, a big part of it was the housing. I mean, we've seen that over and over again on documentaries about the situation in Iceland. Has that been resolved? I mean, is the banking sector now stable, and is the housing sector now on a path to sort of sustainable recovery?
No, I don't think you could say that the Icelandic, it's not stable. The country still has capital controls, meaning basically we don't know what would happen if you lifted those capital controls. Maybe people would take all their money out of the Icelandic banks and they would collapse again.
In the worst case scenario.
In the worst case scenario. But I think, so we're still sort of in a precarious situation where, as we have seen, you know, the incumbent government being voted out and there's uncertainty about the economic future.
I mean, that's very different than what the media is talking about when it comes to the economy there.
Well, I think that there is some people, the media like to bash banks, and therefore they like to hold up Iceland as a country that let its bank go bust, which they did. And it's also a country that obviously has its own currency, which means that you can sort of contrast it with countries in the euro area, which also had large banking crises like Ireland or recently Cyprus. The Iceland had a huge devaluation as well, which is really part of the reason why inflation keeps being so high. So there is a bit of media hype concerning Iceland, in my opinion.
You point out something very important, that is this the so-called bailout for Iceland is very different than what we saw in Greece and Cyprus, and the biggest difference is the fact that you don't have the letters E and U behind all this money. Tell us a little bit about the challenge, because they really, for more or less, did this on their own.
Well,
with the help of the IMF,
They did it in a traditional way through the IMF, which meant that they basically let their banks go bust. As I said, they imposed lots of losses on the creditors of the banks in the same way as was recently happened in Cyprus. But then they also basically let their currency collapse, quote unquote. I mean, the Icelandic krona lost 80% of its value, which is quite clearly a remarkable loss, which pushed up inflation to nearly 20%. Inflation keeps being relatively high. But I think more importantly, it's also important to keep in mind that the only thing that was really wrong with the Icelandic economy was the banking system.
I want to quickly ask you before we're out of time, the EU. There's been a lot of discussion of potentially Iceland reconsidering going back to the EU. Your thoughts?
No, I don't think there's any doubt that with this new government come in, which ran partly on a ticket of basically pushing back on potential EU membership, that is off the agenda for the foreseeable future.
Okay, we'll leave it at that. Jacob Kierkegaard, thank you very much from the Peterson Institute.